First of all, tell us a little bit about your ethos, your venture capital focus, because you're a man who really has started to up the game, getting in deeper and deeper into certain investments. I hear you're a bit of a gaming man yourself, and is that the tested rule?
Absolutely. So our strategy has always been invest in top-tier founders running strategically huge companies, regardless of sector, and go all in on the best ones. Put a huge amount of money behind our best companies, and that's been the secret to our success.
You went all in, notably with, well, perhaps you went in with Oculus. You then regretted not going as big a share as you could have done. But what an exit for you. Oculus being sold to Facebook. We know it was a $2 billion deal as it was announced and structured by Facebook. F8 took over some of the news this week. VR, AR, this is certainly an area that Facebook's getting into. How do you see virtual reality and augmented reality, the spectrum changing?
Yeah, absolutely. So Facebook is doing a fantastic job leading the charge for the next decade of communications. And they are playing the long game with the VR, AR, leading with both buying, obviously with Oculus, and developing new technologies. So I think you're going to see some exciting elements of communications, gaming, everything else, led by VR and AR over the next 10 years.
Brian, David Kirkpatrick here. Another thing I'd be curious to hear you talk about, given your track record, is the Internet of Things, which sort of encompasses more and more these days. Is that something that you think about in those terms, and how important do you see it to be?
Yeah, so we think about it in terms of how we think about everything. It's all about the micro company. We actually are very sector agnostic in that we don't think, oh, we need to invest in this specific sector. We think, oh, wow, this company is amazing. So if we saw an amazing company in the Internet of Things sector, we would absolutely go for it. But that's how we think of it more generally.
Thinking about amazing companies, or the lack thereof, I'm looking at my Bloomberg US Startup Barometer. This is a means by which we measure how sort of active, healthy the VC system is, the startup system is in the United States. We're measuring how much money is going into startups, the exits that we're seeing. What then to exits at the moment, and how you see the health of perhaps IPOs? I'm looking at you with an investment in Spotify, Founders Fund has. Do you want these companies to be coming to the market as soon as possible, or laying low?
Honestly, this is not a macro question. This really is a question that's independent for each individual company. At the board level, we discuss liquidity, financing, all aspects of that, whether to go public, stay private, and it's a really different decision for each company. So I don't think it has much to do with the macro environment, more to do with the individual companies.
What's fascinating about Spotify is, of course, talk that it wouldn't actually be raising more capital when it sold shares. It might feel that it would just be exiting, helping give money to its investors, helping cash in for those who founded it, but not raise new capital, just list. What's in it? Why do that?
I mean, Spotify has obviously clearly an independent strategy. Maybe a lot of its investors were saying, oh, we need liquidity. Maybe Spotify realized it didn't necessarily need the money for itself to run operations. Maybe it has plenty. Point being, this is a great example where there's not one right answer for every company, and Spotify chose the path that it thinks is the best for the company itself.
Brian, given you call it Founders Fund and you're so notoriously founder friendly, and another thing that's been a big part of the VC industry for a long time is this idea of investing in the person, not the idea. Is that sort of another way of saying what you do?
Absolutely. A huge part of our investment decision, whether it's at the early stage or the late stage, is based on the founding team, based on the management team. It's really important for us to have founders that are both strategically long-term visionaries as well as very execution-oriented. It doesn't make sense to have one part without the other, and when we find those two elements in a team that's doing something that we think is important for the world, we tend to make the investment.
What sort of funding rounds do you want to get in on? Are you looking at earlier and earlier stages? We're seeing a plethora of seed funds coming in. How is the battle going for when you find the company and how large a ticket you're putting in?
Yeah, honestly, we are totally stage agnostic in the same way that we're sector agnostic. I have no FOMO, fear of missing out as an investor. When we see that a company has developed a strategic moat and it's well on its way to being one of the most important companies on the planet, we go all in. That can be at the early stage, that might be at the later stage. Point being, we have the fund structure set up that we can account for all of those.
And David, do you want to have a quick last question?
Well, I do, because I wonder, how do you identify those strategic moats? You've obviously been really good at it, and you've doubled down on a number of companies, including that health company. I forget the name of it.
Stemcentrx, yep.
Yeah, one you made a ton of money on. How do you, I mean, that's the kind of thing everybody could say, but you seem to do it. Is there any secret sauce in that for you?
Well, I can't give away all of our secrets, or else I would be out of a job. But honestly, we really do try and answer the question, can this be cloned at this point? And if the answer is no, and it's got a phenomenal management team, we're going to go all in. But it's a really important question for us to figure out, can this be cloned at this point?
And my last question about the sort of overall ecosystem is the more and more big ticket money is coming in from later stage investors, from institutional money. How is this making your life more difficult? Or is it in some ways putting off big companies that potentially should go public going public, or does it not matter in your case?
Honestly, I still think this is a very company by company basis. Our job, right, is to find the world's most important companies and invest in them. It doesn't necessarily have to be early, but we have to invest in them at some point. And so regardless of what the funding landscape looks outside, that's what we're looking to do. And so I don't think it changes, fortunately, our job that much.